All right. We are live. Good morning, everybody. Welcome back to the morning show here on Stock Market TV. Spencer, JC, Steve, Alfonso with you on this lovely Wednesday morning. We're talking about Netflix, right? We have to. It's the story of the morning. It's up 15%, $1,000 a share in Netflix. And then we'll see where the morning takes us. I know we have some more banks reporting, and the banks are just continuing to show strength, energy. Nice days, or nice few days as well, actually. Maybe we'll talk about that. We'll have Kenny Glick on the show. We'll have a returning guest who hasn't been on for a minute, Kevin Green, senior markets correspondent at the Schwab Network. He'll be on at 9. And then we'll have Mary stop by as well, as she does every Wednesday. So that's the plan. Drop us a like, please, and thank you. We'd appreciate that. Let's bring JC and Steve on, and here we go. Oh, I didn't bring him on. My bad, guys.
All right, let's go. Oh, we partying hard. I'm heading down to Florida. I'm heading down to Florida today. How do you feel about that, Florida man?
No, you're not. What do you mean?
I am.
Where?
Yeah, I was going to Jacksonville.
I'm going to Jacksonville.
He's going to Jacksonville. Is that Florida, Steve?
Oh, that's right. I knew about this.
Yeah. It's like technically it's Florida, but in reality it's Georgia. You know, right?
Right.
It was fine.
Definitely, Florida is basically north of Fort Lauderdale is basically Georgia, right?
Jacksonville is really like Georgia. Even like the trees, it looks just like it.
I mean, I'll be on the beach. It's going to be freezing. I'm sure it'll be fine.
It's a strange venue to have that on Jacksonville Beach.
It's the last time they're doing it there.
In the middle of the winter, too.
Well, it was nice last time we were there, wasn't it?
It's cold.
It was a little chilly.
Beach.
So the Nazi salute. Are we taking the over or the under here? On Elon Musk being a Nazi.
I watched the video.
Yeah.
Looks pretty bad. Is all I'm saying.
Pretty bad.
Come on, man.
Looks pretty bad.
Yeah. I mean, I'm usually like the one be like, oh, he's an idiot, but like genius, but like also,
Wait, I said this yesterday. What the hell?
Like he was nervous. He wasn't thinking. I don't know, man. It looked bad. Not a good look.
I said this yesterday.
I mean, I really don't think that Elon Musk is a Nazi, but like, man, you're not helping your case, brother.
No. All right. Can we talk about Netflix, please? State of the markets.
Yeah.
All right.
Yeah. All right, we got the Dow futures up 145 points this morning. That's 1/3%. 44,400 we are now pushing. 44,400. S&P 500 futures up another 0.5% this morning. 6,118. That's going to be new all-time highs, for the S&P 500, if I'm not mistaken. NASDAQ 100 futures up a full percent this morning on the heels of Netflix absolutely ripping in everyone's face. Up another 200 points for the NASDAQ, pushing 22,000 for NASDAQ 100 futures. 30-year bond futures slightly higher, pushing 114. Crude oil flat, right at just under 76. Copper down 50 basis points, hanging out near that 430 level. Gold flat, not sure, 27.60 for gold. Silver down 1/3%, 31.5, with the volatility index back under 15, 1475. Over in funny money land, Bitcoin 104,800, down 1,300 points this morning, 1% and change. Ethereum 3,300, down 1% on the day. Solana up 5% today, 263. Big moves from Solana today. Big moves, very impressive actually. Binance pushing 700, up almost a full percent today. SUI down over 2%. Down to 455 with the total crypto market cap. Mr. Spencer Israel, we're looking at 3.55 trillion. Just $200 billion from all-time highs.
Yeah,
how do we feel about this morning's futures?
I saw Lou's note talking about Ethereum being a disaster. He was looking at the ETH Solana ratio, but Solana's strong, like you said. So and ETH is not, which we've known. But
the big ones have to break out. Like
Yeah.
you got to see these blue
like his note.
chips finally stick these breakouts. Binance too.
Strazza, talk to me about the Solana. Are we expecting a Solana spring?
I don't know, man. Hard to say. You got to get the breakout in. You got to get the breakout in. Still.
And then what levels do you consider a breakout?
Let's see. I'm having chart problems, but it's the former highs, so the prior cycle highs, and the recent pivot highs. They line up, same level, whatever that is. People really did like yesterday's show. You weren't kidding, huh?
Why? Who said something?
No, just looking in the chat now.
How was the what are your thoughts with Michael Batnick? Was that good?
That show is so fun.
Is it?
Yep.
What were your thoughts? Out of curiosity.
What were your thoughts?
Well, we talked about Pelosi. We talked about Inauguration Day and all these executive actions. Michael was talking about stock market breadth. So that was fun. But the format of the show is just a blast. And we used to do a thing. You know what somebody said to me last night? Bring back Pardon the Price Action.
Pardon the Price Action. Hell of a show. Pardon the Price.
I haven't thought about it in so long.
I have, because I was watching some of the videos recently. It just came up like on my phone or something.
We should bring it back.
I know we should bring it back. It was pretty great.
It's a fun show.
Let's if anybody missed the live stream yesterday with Jeff Mackey, Mr. Spencer Israel, if you were to drop the link in the chat, listen, guys, we are, like we say all the time, we are incredibly fortunate to have very, very smart, well-informed friends, just old drinking buddies, right? I mean, that's really the truth. And some of these folks are real experts, in their fields outside of kind of what we do. And Jeff Mackey is like Exhibit A, old pal of ours. And when it comes to consumer retail, I mean, this is 70% of the U.S. economy. There's nobody else. Like, there's Jeff Mackey.
Yeah.
And he's so on another level that I couldn't even tell you who number two would be, right? Like, when you think consumer, when you think retail, it's Jeff Mackey. Who would even be number two? I have no idea.
No, there isn't one.
Yeah, there are like some industries that are known. Like there's like one well-known sell-side person who is like known as being like the guy, but that person doesn't exist for maybe like Dana Telsey, maybe. She's pretty good. She's pretty good.
I don't know. But, I've never heard of this lady.
Telsey Advisory.
Yeah, but other than her, I really don't know anyone that's on Jeff's level, right?
No, Jeff is the best, and I'll be going back and rewatching the video. I had to miss it last night because when he talks about consumer stocks, I want to know what he's saying.
I thought it was fascinating what he was talking about Netflix. See, so I'm dumb when it comes to this stuff. I don't know anything, right? Like literally, and he proved just how dumb I was with my dumb questions. Yeah. But I was very, I was fascinated by his answer, and I am now more informed. Yeah. And my question was, we're talking about Netflix up 15%. If you want to show the chart. Hitting new all-time highs as we speak, obviously helping the NASDAQ 100 up 1% this morning. But I was curious as to why Netflix got rid of their social component, right? Because I've been a user of Netflix for 25 years. I mean,
what's the social component? What is that? What do you mean?
Well, back in the day, they would mail you DVDs and then you would mail them back, right? So you would have like a queue, which was like, okay, these are the DVDs you have. And then these are the DVDs that you're getting next, right? So when you mail these back, these are the ones you're getting next. It would be like a queue, and you can adjust your queue. But then you would have friends that also had Netflix accounts, and you could go see what they're watching, and you could see what's in their queue, or you could see what they just watched, right? Like there was a social component, and we would use it, right? Like I'd be like, oh, I wonder what movie I'm going to watch next. Let me go see what Bob D., let me go, or EA, some of my college buddies, let me go see what they're watching or what they have.
Wait, just listen to what Jeff's answer to this question was, though. Because
So the answer to the question, I'm like, why did they? Because Amazon's got that component where they tell you, what people like when you're looking for an item, and I use that. It's very helpful. So what his answer was is that you don't need to look at what your friends are doing because the algorithm knows what your friends are watching, and the algorithm knows what you're going to watch next. So they just tell you. They just skip right to it. And I was like, oh. So yeah, that sounds right.
I don't want people to see what I'm watching. What's wrong with you?
I thought that was cool. I don't know. I had nothing to hide. I was 21 years old. I don't know. We were watching like, Reservoir Dogs and like, I don't know.
Yeah, no, I would want nothing to do with that.
Anyway,
Really? Why are you so embarrassed over what you're watching?
I'm not embarrassed. It's what I'm watching. It's private.
Deep Throat Part 5.
all right. Anyway, Netflix they had a hell of a quarter. They had one of those quarters that like they just dropped the hammer on everybody here. So the earnings per share $4.27 versus a $4.18 estimate. Revenue $10.25 billion versus $10.11 billion on the estimate. Subscriber growth estimate. The estimate was that they would gain 9.18 million new subs. Actually, they doubled it. They gained just under 19 million new subscribers. I saw that number and I thought, there's no way that's right. How is that possible?
Me too.
And then I remembered they had a Jake Paul, Mike Tyson. There's a chart. They had a Jake Paul, Mike Tyson thing, and they had 2 NFL games, right? 2.
What is the total addressable market? How many humans are there in the world?
Yeah.
Like, how are they still growing this much?
It's a great question.
Well, they're raising prices, aren't they?
They are also raising prices, and that goes into the guidance that they gave, which was above estimates on that number. And while they were at it, they said, "Oh, by the way, we're adding $15 billion to our buyback program. So, we can now buy." They've bought $17 billion of stock back as of the end of the year. So
this is impressive. There's no other way to cut it. This is a really impressive report. And the Jake Mike Tyson thing, Spencer, that was just their first foray into this new, live world for the most part.
Strazza's right. You think that was the last one, no matter how bad the fight was?
Right.
I mean, the best part was when Mike Tyson showed his ass when he walked away and he's got the diaper on. Remember?
No, the best part was when he said he has what did he call it? He has a fetish with ears.
He said that?
Yeah. He said he's got a thing with it. Yeah, that was funny.
The word he used, it was a great word.
Yeah.
Yeah, he said it right there in the ring. Fantastic.
Hold on. So what happens? That's it. Target achieved. That's it.
Well, hold on. But a great point from the chat. And let's remember, it was like a year ago. Netflix said, you know what? Actually, we're going to stop reporting our subscriber metrics because we've already reached maturity. How many more people can we possibly get? We're going to start leaning into the profitability numbers. We're going to be raising prices, cracking down on password sharing, doing ads, all that stuff. So don't focus on the subscribers. Focus on the profitability. And then here we are. It's like 8 months later, and they say, "Oh, by the way, guys, we just had our biggest quarter ever for new subscribers. They are now above the
show the subscriber growth. Are you saying that they said they're going to stop sharing this number and then they showed it anyway, or they decided to stop it after they showed it?
No, they said they were going to stop it in like a year ago. They were going to they did stop. They stopped for most of last year.
These were just too good.
They were too good. They were too good.
Yeah,
Wait, really? Yeah. They stopped reporting subs and then restarted just like that?
Just like that. Because
are you sure?
That's what they said they were going to do.
We should get Braden on to talk about this. He does some work around that when a company stops reporting like a key performance indicator. It's really interesting.
I mean, they have so they now have 300 million subscribers around the world, right?
Mm-hmm. It's crazy.
There are 8 billion people on Earth, right?
It's just crazy.
So how many subscribers do they have? 300
million.
Wow.
So now the new prices, did I see like $30 a month? I'm not paying that.
Yeah, they're raising prices for everybody.
You're not going to pay that? You're going to pay it.
This is streaming inflation. It's kind of crazy. Prices have doubled over the course of a few years, have they not?
Not just them.
Dude, I have been a subscriber to Netflix. Seriously?
JC was their first customer.
I was probably since 01. Probably since 2001. Yeah, probably my sophomore year of college. Yeah, 01. So that's what, 24 years ago?
All
That's
right.
crazy, right?
Wait, mea culpa. I'm being corrected in the chat. This was the last time they're reporting subscriber numbers. What a coincidence that is.
They couldn't because you can't turn around 2 quarters
Fine.
later.
Fine, whatever.
I'm not a big fan of the Netflix story. This is just a fantastic report.
Yeah,
I think $30 is too much. $30 a month. I think it's too much. It's not a great product.
I think it is a great product.
Yeah.
I mean,
okay, can we talk about Nike? Because I want to hear Strazza's thoughts about Nike. This is a great American brand, right? Facts only.
Yeah.
Right, Strazza? No arguments?
Great American brand.
Great American brand. When Strazza talks about these great American brands, like Nike is that, like, to a T. Right?
Arguably the greatest.
Oh, wow. Oh, wow. Arguably the
conversation.
greatest American brand ever. Steve Strazza, let me ask you this. Do you think that this great American brand, of which is Nike, is going to complete this massive top in the middle of a bull market? Can you throw up a Mackey's chart?
No shot.
Yes.
What did Jeff say? Did you ask him about this?
Of course.
Oh, hell yeah.
So Nike going down, as we're well aware, and then the not Nike. So this is shoes sans Nike, right? So these are all the other shoe companies going up and to the right, while Nike's going down and to the right. And Mackey says that all these other companies are taking market share because, like, at this point, like, Nike, like, they can't get any more market share. So these little guys like On and Skechers and Deck, right? Adidas is killing it, right? They're taking market share. How do you feel about that?
So I wrote that in my note, but I think it's at the point where we're in a 60% drawdown. None of this is a secret, right? No one's wearing Nike. I get it. 100%. Yeah. All of these little smaller brands are really, really eating into their share and a number of different product categories, right? It's a big problem. But at a certain point, they're Nike. They're the global, one of the global dominant retailers. You're getting the stock at a huge discount, 60% off its highs from just a few years ago. If you look at the relative trend, do we have my price relative chart? It's been like 30 years of no outperformance from Nike versus the broader market. I don't think that continues. I think they figure it out. Great American brands do. And this is a really logical level on both a relative basis and an absolute basis to take a shot. And when you take a shot on something like this, like I did last year and got stopped out after the stock dropped like 15% on earnings, when you take a shot like this, you try and keep it super tight, right? And with Nike, you have the pivot lows right here. So a couple points to the downside, you're out, and you could try it again. The base might need more time, right? But I think you're getting some evidence of a bottom here. I like how nasty the sentiment is around this name, and it's Nike, man. So maybe I'm biased. It's Tiger Woods and Michael Jordan are my favorite. So,
throw up the bullish momentum divergence there that we potentially have on this top. I don't know anything about like market share, and I don't know anything about like these other things like Deckers. And throw up the Nike chart there with the bullish momentum divergence, please. I don't know, Strazza. I think you dig in here. This is what, the fourth largest component of consumer discretionary. What are we talking about here?
Yeah.
So Dow component.
Getting about a 2% yield from these guys too.
We're looking at Nike is the 9th largest component in the consumer discretionary sector, just above Chipotle and just after Starbucks. Fun fact, Nike.
Just look at like the comments.
Nike's market cap. Guess. Go. Don't look.
100.
Yeah, you nailed it.
Good. But just look at the chat. Like, that's the sentiment. I told the guys, the analyst team guys, what I was planning to do. Oh my God. You should have heard the blowback. Nobody wears Nike. And it's all true. It's all true. But I think it's baked into the price by now.
Can you throw up the new slide 11? I just think it's worth talking about. And throw up the link one more time there, Spencer, in case anybody missed the conversation with Mackie yesterday. It was fantastic. We were talking about Gap, because Gap has been doing very well after the real dumpster fire. If you look at slide 11, so they decided that it would be in Gap's best interest to listen to one Kanye West in terms of how they should sell this clothing. They decided to display Kanye's new sweaters and whatnot in large garbage bags. Large garbage bags was the final answer. And as you can imagine, it did not go well. Did not go well at all.
He's a fashion icon.
Is he? This is a bad idea, right? I mean, granted, Monday morning quarterback, hindsight 2020, like all that stuff. But like, I don't know anything about retail stores, but like this just doesn't seem like a good idea. No, am I crazy?
Some would say it's art.
I think that's what Kanye was probably arguing, right? His artistic expressions or whatever it is that they say, right?
He's a lunatic. This is hilarious.
Because you're so normal, right?
All right. How about some other earnings reports? Can we talk
throw up the chart now. Throw up the chart. So now Gap making a comeback. Don't call it a comeback. You know what I'm saying? So Abercrombie and Fitch coming off a little. And then, I wanted to like poke Mackie and see if I can get him to say something. And I was like, so what do you think, Mackie? Long Gap, short Abercrombie and Fitch, right? And I asked him just like that. And I was kind of like joking, but like I actually wanted to hear his answer. And he went with it. He's like, yeah. How do you feel about that?
Short Abercrombie.
Short Abercrombie, long Gap for a pair, for a mean reversion, Gap catching up to Abercrombie.
This is a sector or an industry group where I'm open to the idea of a pairs trade. A lot of times I wouldn't be, right? But you can get like some just really nice bifurcation in this space where long and short does make more sense in a group like retail or consumer. I don't know, though. If Gap is working, isn't Abercrombie working? Aren't they right next to each other in the mall? They seem very similar.
What was the last time you went to a mall?
I was at the mall 3 weeks ago.
At the Trumbull Mall?
The Bridgeport Mall. Yeah. Oh, what a place.
Wow.
I had to go get a new phone.
Yeah.
I was there for like 3 hours. So
you're going to get shot, bro.
Yeah, it's dangerous.
Yeah, it's not worth the risk reward. You're going to go into the Bridgeport Mall. You're going to go anywhere near Bridgeport for what?
It's not that bad. It's not that bad.
Bridgeport is not that bad. Said no one ever.
Bridgeport's fine, man. Bridgeport's got flair. Bridgeport's got some great food.
I got jumped in the bathroom at the sports page.
Definitely.
Back in 2000. Fall of 2000.
Dear
they got me good.
That'll happen.
A little shiner going here. I wasn't even doing anything.
Yeah, that's right.
Like I've definitely deserved a beating in my life for things that have come out of my mouth. That wasn't one of them.
Bouncer beat him up for trying to use a fake ID.
No, they didn't even look at the IDs back then. This was before 9/11.
Let's find out if Kenny's ever been jumped.
Let's do it.
All right.
It's been a long time coming. They ain't cuffing my clock, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Kenny Glick in the house. What's up, my man?
Never been jumped. There's a Beastie Boys song that had that lyric. I'm trying to figure it out with my head. What's up?
It was only one time. I'm gonna head down to Florida, but I just wanted to say hello, Kenny, and I just wanted to let you know how much I appreciate you. You bring such energy and value to our conversations every day.
Thanks,
not to make your head any bigger, but you're a fucking legend, man. People love you. Like you are like a real life legend. And again, please don't let this get to your head. But
I am a Marylander.
Dude,
fight for the rights.
The amount of feedback that we get both like online and like out in the wild about Kenny Glick, forget about it. So I just wanted to say that. All right, guys, if you're not in Kenny's room, I don't know what you're doing. I'm out. I'm going to Florida. Adios.
What? You can't just leave like that.
Whoa, all right. Well, we could talk about me getting beat up. I'm a little white Jewish boy from Brooklyn. I used to get my ass kicked all the time.
No. I'm more interested in are you getting beat up in the market or not? That's really what I care about.
No, yesterday, there is a word, and I love it because I didn't really do well on my SAT. Microcosm. Yesterday, a microcosm of everything you need to know about trading as far as we're concerned. And again, January is always a month where everyone's making predictions for the year. I wasn't even done typing out my thesis on my short ideas. And then I just ripped it up because 48 hours later, all those ideas were gone.
Ooh.
But, I was on Yahoo Finance last week and we were talking about the collapse of the quantum stocks. And I was like, now this would be a great time for me to suggest that you buy them. Lunar and, Lunar was my favorite stock. But, amazing comeback. But going right back to what happened yesterday, right back to earnings. And I know each morning we throw out these little weird biotechs because they're always ripping in the morning.
Yep.
But now that earnings are here, we're focusing on our earnings. So Schwab yesterday might be boring to some, but it was fantastic to us. DHI, home builder, and of course you had 3M. So let me show you the Schwab trade. And again,
talk us through this action.
Yeah. So right there, if you, it's not just a painting. We were talking about chart art the other day. This is something that just makes me feel good, because what this is showing you is that this is what we do for a living. What you're looking at right here, let me get rid of the red lines because those were the pivot points where we traded the stock. So what you're looking at there, just roughly, is the blue line is yesterday's VWAP. That's the 1 minute. That's your standard. But the magic is the orange line. That was prior VWAP from yesterday. So when we come in, my default is to play the fade. If you're not fading, you're not trading. Usually gapped up stocks, I'm looking for a reason to short them. Now, again, sometimes that's short, just like yesterday, we did short the QQQ. We'll talk about that later. But the first instinct is for me to short the stock. But I wasn't watching the Schwab, so I kind of missed the move down and then immediately breaks over the VWAP. And the one thing I love about VWAP, if there's a list of them, it's by 100 reasons I love trading this VWAP, it just solidifies the idea. So if you were looking to play the fade and you're breaking back above the VWAP, the fade is over. Buy the stock. So we know there's going to be short covering and we know there's going to be buying. So within 3 minutes of this short idea, we corrected ourselves and said, all right, it's time to buy some Schwab. Now, here's what was awesome about it. $80 stocks, when they start to rally, we look for $2.50 because the days, I don't know if you guys have been trading as long as I have, 80 gets you $82.50. When you're over $75, stocks tend to start moving in 2.5 point increments. So we were just looking for $82.50. Look where the stock went, $82.50, basically $82.60. And then you had this triple top. This is why I'm about to talk about microcosms of trading.
Yeah.
So if you came in with the default of I want to short Schwab, Kenny, you told me we're shorting stocks that are gapped up. Okay, cool. Wait for it. Now, if the people were looking to short it, as I was talking about how now that you got 80, got you 82.50, if it breaks back under the 82.50, we could short the stock with just a 10-cent risk with the triple top, which is what we did. But the real important part was this moment where it broke the VWAP, came back, and rolled. That's the opposite of the dip and rip or the faux show bro. That's more or less you're getting faked out on the upside. So it's
how do you hold it? Wait, how do you hold a short through that, Kenny? Because that looks like it's gonna be. It could be bad there for.
Everything we do is in increments. That's how you avoid getting stopped out, getting jiggled out, or shuffled out. So again, if you shorted at 82.50, you have a lot more risk tolerance. But let's say you just shorted the VWAP break here. The breakdown price is our out. And you see where kind of this candle is our stop? Look how it flirted with that price, but never got over it. So we actually stayed short, even though it got, we had a little profit momentarily. Then it's going against us. But we don't want to panic because we're going to use the tops of those candles over there, the shoulders of the rollover. But more importantly, when it rolled back over, let's say you did get nervous and immediately got stopped out, you got right back in. And then when it broke back below that pivot point, that's where the magic began, because that's when the trend was enacted. And look where we went back to prior day VWAP. And look at this wonderful time to cover the stock. And then right at prior day VWAP, it provided you the fake out, shake out, and a reason to now not only cover, but go long as well, because the setup was here. So we had a target for the downside, covering the short here, and then going long right on this little momentarily, this little shuffle or jiggle right there, then retraces to the VWAP. And then even if you were if you didn't want to take that shot down there, another VWAP break late in the day usually is a good idea to buy the stock. So look at this move right there, just a late day VWAP break above 80, and you got paid again. This stock was amazing, but now look at DHI. So here's DHI, and I want to just show you a couple of charts for today, and I'm going to get out of here. This was another one. Look at this move. Look at the orange line right there. And again, take my word for it. When it was there, this was a living, breathing chart at the time. This line was right there. So it went from the blue line, today's VWAP, to prior day, held it, rallies. So again, you could have played the fade, got paid, knowing you can't stay short back above VWAP, you're getting paid on the upside. And then what I did was I was waiting for a short because I love shorting, and there's the break. And this was a nice clean break right back to prior day VWAP. And then here, look at this action over here. You can't get back above the prior day, provides you another shorting opportunity. And this was a short while the market was ripping higher. So again, staying stock specific. When a stock is bucking the trend, you stay with the stock, and it was pretty good. So,
are you looking for because these are 1 minute candles? Are you looking for them to close above or below the VWAPs, or does it not matter?
I am. I'm actually. I look to buy some at the VWAP break. Then usually comes the jiggle, because at VWAP things happen. You get the shuffling, the jiggling. The stock's making a new decision as it reverts or gets back to that area. So after that consolidation or that jiggle or that shuffle, that's when it makes the second move. So that's why we use 3 different entries.
So several candles mean more to you, obviously.
Right. So for instance, like here, for instance, like Halliburton, there's not a lot of volume on it, right? But what I'm looking for is a buy on Halliburton. And right now, again, if I was watching it 2 seconds ago, I probably would have bought it. So as it's just breaking VWAP, I start a position immediately. As soon as the price is breaking the blue line, I'm in. And if I'm wrong, I'm using the lows from where it came from as my outs. That's exactly how I define the risk. And if a stock tends to, again, just like I showed you, now what I'm expecting is it to go flirt with that orange line, where you could either take some profits or expect it to break over that and start to rally back to the highs of the day. Now, again, not a lot of volume. Not a really big fan of the stocks when they don't have a lot of volume. But Johnson & Johnson, let me show you right here. Perfect example. Numbers come out, rips, hits a whole number 4 different times, can't get over it, bang, breaks the VWAP. You're a shorter at VWAP using the high of the pre-market as your out, back to the orange line. Everybody's getting paid, and we're out. So great trade on Johnson & Johnson so far, if you were around this morning. And, again, just there's so much activity. Yesterday was an extravaganza again. I thought it would be boring. I thought it might be choppy. I thought it might be, stocks would be all over the place with all the news out there and people not knowing what to do with the new Trump. And none of that happened. It was a fantastic day, and I expected more.
If you are trading early in the morning or trading earnings, this is the way, honestly. So Kenny's doing it every single day. Check his room out, right? Hitthebid.com, risk-free trial for all, and you'll see how he does it every day for real. This is what he's doing. This exact thing is what he's doing.
30 years now. So listen, guys, if you guys want, tomorrow night, now that we're in earnings season, I stay. Thursdays, I never leave. I'm here basically from 8 to midnight.
Because Thursday is typically the biggest day from an earnings standpoint.
And we do something at night called the Schmooze. We play some Grateful Dead. We have a couple of cocktails. We just hang out. We crunch some charts and get ready for options expiration. So we're going to open up the room again this Thursday night. If you like the Dead, come at 6 o'clock. I usually put a Dead show on from this day in history. So 6 to 8, we usually just singing and dancing, and then we crunch some charts from like 8 to 9:30.
Also, this afternoon and tomorrow afternoon, for that matter, at 3:30, Kenny will be live on our channel here on YouTube. Just
right on. Yeah, I want to show you how to play the knee-jerk reactions and chart the attacks, and that's it. I mean, the way we trade, again, we're not speculators; we're more reactionary traders. So once the news comes out, we don't have to react to that knee-jerk reaction, but you just chart the knee-jerk reaction and then trade around it. So again, Johnson & Johnson, so far so good if you guys are still short, and Halliburton long, and we'll see what happens. I'm sure there'll be other ones. I'll see you guys later.
All right, see you later, Kenny. Hey, let's bring on we got Kevin Green in the house. We do. He is here, senior markets correspondent at Schwab, and let's get his take on. I know we have some charts in the deck, I guess from Kevin's Twitter. So let's bring him on and see what we're talking about.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
How are you, Kevin?
Doing pretty good, Steve, man. Long time no talk. How's everything going?
Yeah, seriously. Everything's great. Everything's great on our end. How about you?
Doing pretty good, man. Doing pretty good. Start of the year, saw a little bit of consolidation. Obviously, the inauguration had some technical breakdowns, and now we're trying to recoup here. So very exciting to start off the year, and looking forward to seeing how this is all going to pan out, at least for the first quarter. I think it's going to be very interesting across the board here.
I love the Schwab. Shout out Schwab. We've been saying a lot of nice things about Schwab lately, haven't we, Spencer?
I mean, they're kind of one of the only games in town, right? for what they do. So
solid
yeah.
beat yesterday. That's great. So Kevin, I love our conversations because you can speak on just about any topic. I just took a look at your Twitter page. I'm going to read something from it because I just love this and I want you to kind of expand on it for us. Every year, analysts discuss stocks and sectors they favor, and they often provide price targets for where major indexes might land by year end. I believe both of these practices are futile. The market is dynamic and ever changing. The environment can shift on a dime, so don't get attached to a one-year playbook.
Yeah, and that's look, everybody starts off the year or ends the previous year providing price targets and what they think the S&P 500 is going to do. Look, no one knows exactly what's going to happen for the year in general here, right? So I think a lot of that's kind of just marketing and just throwing darts at a board. And if you kind of look at it, a lot of those analysts also kind of coalesce around the same type of price target. So it doesn't really, no one provides any type of real color there. And I think that the market just overall is very dynamic. I think last year is actually a really good example of that, right? We had some weak economic data kind of going and starting the year last year. Inflation was actually subsiding, right? In December, and everybody was like, oh, okay, inflation's going down, but we see some cracks in the market, what have you. But what actually happened? January, February, March, we actually saw inflation actually reaccelerate. Once you kind of got to June, you kind of got more of the feeling that GDP was actually going to hold up. Consumer spending continued to hold up. So like all of these things kind of change everybody's narrative. So I think it's better to kind of look at the perspective on a quarter by quarter basis and just find pockets of opportunity that are going to be durable no matter what actually happens. And so that's kind of the key thing there. And that piece that you're writing is kind of the Q1, my thoughts about Q1, not recommendations or anything, but just areas of the market that I feel are fairly durable no matter what actually happens with the administration or monetary policy.
Sure. And a lot of times too, just from a technical standpoint, the sectors that are showing relative strength or seeing breadth expansion today are going to be different than the ones that are showing relative strength and seeing breadth expansion 3 months from now. Right? We get rotation throughout the year, and different sectors are going to take the lead and then take the backseat, rinse and repeat.
Yeah, and actually, if you kind of look at it, so we had this lack of breadth in the market pretty much starting the drawdown, right? So we had this consolidation at the end of last year. You actually started seeing the advanced decline line for the NYSE starting to decline. And so we had a concentrated market, and then we continue to see a little bit of a fade. So the S&P 500 equal weight was actually fading a lot more, actually before the S&P 500 generally, right? And usually when you kind of see that action, you're pretty much begging that the Mag 7 or technology and communication services can hold us up. And that just was not the case. And we actually saw this move to the downside. Now, what actually is kind of funny to me is that the technicals actually have been holding up really well over the last month or so. Even to the downside, if you're looking at this drawdown that we had, it actually ended up in three waves, right? We made lower lows and lower highs on a relative basis here. But what we actually saw at the bottom, and actually kind of right before the bottom, is breadth started expanding already. You started seeing some dollars being put to work when it comes to industrials, when it comes to materials, when it comes to a lot of these other different sectors. And then now you're kind of seeing that foundation was actually built, and now we're seeing a little bit of a push through to the upside here. So I feel like and that's going to ebb and flow. It doesn't mean that that's going to always remain the same here. And in fact, I kind of made mention of this yesterday in a segment. I would not be surprised if you kind of see a little bit more of a rotation going back into these technology stocks, into communication services. And then sectors like industrials and materials still, from a structural and technical standpoint, still have maybe some room to run here. But I think we've built a really decent foundation, and we're close to, retesting all-time highs here, depending on how we do over the next couple of sessions.
Industrials look fantastic, and I'm with you. I think the large cap techs, they're already seeing rotation back. You look at these Amazon, Meta, Google charts, they're all breaking out to new all-time highs. They look fantastic. Talk to me about liquefied natural gas.
Yeah, so this is something that I've been, a pretty big fan of. So, high level liquefied natural gas just takes the gaseous form, it cools it by like 260 degrees, and then you basically are able to put it into a tanker and then transport it, right? So it makes it a lot more scalable to take in an area that we have an abundance of natural gas here in the United States and export it over to, let's say, Europe or Japan or Asia, wherever you want to really go with it. And so there has been a theme, especially for last year and even the year before at the start of the Ukraine-Russia conflict, that natural gas disruptions and pipeline flows have been, disrupted either because of hits on infrastructure and or because of policy for the EU here. And what's actually very interesting is that the EU, since the Ukraine-Russia conflict, has been very, very fortunate that weather has not had a massive impact on them. They've had very light weather. But what is also very interesting is now you're seeing a little bit more of a disruption. Their drawdown on inventories is actually a lot more aggressive than analysts have expected. And their goal is to keep 50% of natural gas inventories in storage by the end of the drawdown season, right? And before we get to the injection season. So they're going to have to replace some of those flows. Now, there has been a major pipeline in Ukraine. Now they have shut off those flows. The other side of that, though, is Russia is expected to actually backfill a lot of that pipeline flow with LNG. But there has been a structural issue when it comes to export facilities here in the United States. And so we do see a pricing premium when it comes to liquefied natural gas. The margins are pretty well. There's only a couple of big players that actually have exposure to the space. And until you actually get the infrastructure spend in order to build out more export facilities and pipelines, there have been winners. And so Cheniere Energy is actually one of them that I've been like kind of on the radar on, because obviously it has a massive exposure when it comes to liquefied natural gas. They're the king makers. Their business strategy is something that they manage long-term contracts. They hedge it with derivatives. It's nothing that's really sexy, but the company has been able to do a really decent job here. And then with the new administration, you're going to get more favorability when it comes to LNG export facilities, getting fast tracks on approvals. And so this is actually an industry that has been very durable, no matter what has actually happened. Now, I will say though, Steve, if you're kind of looking at that chart of Cheniere, phenomenal chart here. A lot of this has already been priced in, right? The run has been moved to the upside. So like you would be a little bit more cautious kind of going into this. And eventually, probably in the next 8 to 10 years, we probably will build up an overcapacity of these facilities. And then that's when you're going to see margins kind of, disintegrate, if you will. So right now it's a run up story, right? It's a boom cycle, and there's been some beneficiaries for that. But eventually, over time, the expectations that the market will be oversupplied, and that's when you see pricing pressures. And unfortunately, just to highlight this, unfortunately, what will happen is that the Dutch contracts that you're seeing overseas, their prices for natural gas are going to start going down as quantity and supply actually ramps up. And our natural gas, or Henry Hub, on a longer term basis, will actually start to price and move higher, and you'll start seeing a little bit more parity between those two contracts.
Where's most of this stuff coming from? Like, what countries are exporting this?
Yeah, so obviously, like the United States is a huge component of that. You have Qatar, you have Saudi Arabia. There's a lot of countries that have this, but what's happened is actually the logistics have really been restructured across the globe here. So there's a lot of, Australia is another major, player in this space, but it's the restructuring of the supply lines. It's who's getting the new supply contracts that are really the beneficiaries. And the United States has the ability to scale and ramp up really rapidly here. But since we have a structural supply issue because of infrastructure, people are paying a premium for it. So that's kind of where we're getting it. And then all throughout the United States, I mean, if you kind of look at the Permian, a lot of the natural gas flows are going to be also related to shale production as well. So there's a lot of pipelines, and you can talk about the Permian Basin, you can talk about Eagle Ford, you can talk about in North Dakota and the Bakken region. I mean, there's a lot of areas here in the United States that provide natural gas flows. We just have to get them to the coast, get them to these facilities to be able to cool and then export, and then they're on the way.
2 days in a row. Shout outs for North Dakota. Kevin, I feel like Cheniere doesn't have any real competitors. Like who would be the most like them? I'm trying to find other charts in the natural gas space that look as good as the Cheniere chart.
Yeah, I mean, there's a couple of them, maybe some smaller names. You can look at GLNG. So Golar has some exposure, but they're also in the transportation business, which probably actually is going to deserve a little bit of a higher margin, because you can't build out tankers overnight, right? Tankers take years to be able to build out. Exxon, Chevron, they do have exposure out there, and there's some others, but Cheniere has the major support areas that are needed for right now, right? So they do command this space, and they've done a phenomenal job. Once again, this is not a sexy company. This move is actually it's a low beta stock technically that has actually started seeing a lot more flows, and retail traders really don't focus on it. A lot of the flows that we've seen over the last year or so have been institutional flows rather than retail. And in fact, they only have monthly options. They only have weekly options on the stock, right? So they used to, but they don't have them anymore. So they do command the space. They I won't call it a monopoly by any stretch of the imagination, but they're the ones that actually have the capacity and the infrastructure right now to be able to fulfill demand.
They're the clear industry leader for now.
Yeah.
What about Kinder Morgan?
Yeah, Kinder Morgan is going to be more pipeline related, and that's another stock. It's a
nice yield.
It's a nice it's a nice yield. I mean, it's been moving to the upside. You kind of look at the valuations for Kinder right now, and you say, all right, they're a little bit stretched. But I think if you continue to get that FOMO, we're going to build out pipeline type of narrative, if that's going to continue, then Kinder will probably continue to see some positive flows there. But they're more of a pipeline mover. They're the ones that are moving the product from one region to another. That's where they kind of reside rather than full on liquefied natural gas.
Interesting. Should we move on to copper?
Yeah. So the copper. The copper story is actually a very interesting one. Look, so obviously it had a nice little pop to the upside here, pretty much since the start of the year, and I dropped that a couple of days after the start of the year here. But copper is actually a very interesting one because we've seen this enthusiasm when it comes to AI infrastructure, as well as the potential for China to kind of really see some of the stimulus measures take place here. So this is going to be one of those products that obviously is going to be that China story. And then also it's going to be an infrastructure story here in the United States. And so we did see copper kind of hit a key area of resistance sitting at around $4.50. And you're kind of looking for a little bit of a pullback, retest about $4.25, and then try to push higher. And then that higher area where it seems like could be potential value sitting at around $4.70. Anything above that from a technical standpoint is kind of like icing on the cake. But what's interesting about copper ore is still in short supply in some respects. Now, the market is expecting that the supply of copper ore is going to kind of reaccelerate here after some mines come back online, and we have some new mines that are opening up. But when you're looking at smelting operations, the capacity right now has been ramped up significantly, especially when you're looking at China. So China is actually one of the major consumers of copper. They consume around 55% of global production and global supply on a yearly basis. But what the problem is, they're not really consuming as much. And in fact, in November and December, they were actually a net exporter, which is something that's kind of rare for China. So knowing that they're already a net export and the prices have already kind of stabilized here, eventually the thought process is that the stimulus measures will kind of trickle through China, and then you will see copper demand going up. If you're looking at their stockpiles in Shanghai, they're down like 67, almost 70% since July numbers. And so they're going to have to backfill that inventory at some point in time. The smelters last year, especially if you're looking at August into September of last year, because the copper ore was such in light supply, Steve, they were actually recycling copper, right? So it's a structural issue that they're kind of seeing. They recycled copper, but at the end of the day, they're not consuming it as much. I think the China story is still going to be something that does come to fruition. I know that there's definitely some risks that are out there, but I do believe that once that story kind of really runs, I think copper is going to be the big winner for that. And if you're looking at copper on a longer term time frame, you look at it over the last 20 years, 30 years, 40 years, copper is usually one of the only commodities that triple top and then break down. It's usually not a one cycle and then everything's said and done, kind of like oil. Oil usually has like a major boom bust cycle of a year or 2 years, and then you see it pull back to the downside. Copper is not that way. It comes up, continues to retest, it will retest again, and either it's going to try to break out or it'll fail. So we're at the second form going into the third form of this cycle, and so copper is once again a structural trade. Does it break down below 4? If it breaks down below 4, 375 is kind of your area of support there. 475 is going to be your major area of resistance. That's where I see copper going, and it's been a pretty decent mover. Pulling back, but I think that pullback is more technical in nature rather than anything that's concerned about global global growth fears right now.
I mean, if we get north of 5 in that chart, you zoom out, it really looks like gold, right? And you talk about how, maybe there's a catch-up trade there. It hasn't worked like the others have. Crude oil starting to work. We're talking about natural gas. Precious metals are working. I don't see why copper looks any different from gold, when we look back in a few years.
Yeah, I think it's the application of it. So gold has the structural buyers of a lot of these reserve banks kind of getting into it, and copper once again has a structural supply shortage right now. But eventually it will be. The thought process is eventually that copper ore is going to kind of replenish itself in the market. Now, it kind of also depends on this build out of infrastructure here in the United States as well. I mean, if you're going to have the AI story, the data center story, you're going to need to also have copper. If you're going to have the build out of small modular nuclear reactors, you're going to need to have copper. If you're going to have a lot of these bigger projects in the utility space and the technology space, you're going to need to have it. But the real gold, if you want to say it like that, the real gold for copper is China. You cannot have that demand slide off. And that's kind of why it's been a little bit more depressed than gold. And it's a global reflationary story too. So if you kind of have the inflationary fears kind of subside, copper is going to also get hit with that. And the same thing with silver. But it looks decent. But once again, two different metal applications, even though the charts really do look similar, copper can fade a lot quicker than maybe gold can, in my opinion.
Are the industrial metal stocks, maybe as much as anything, I mean, the price action after the election, right? You had like a breakout in something like metals and mining index, XME, and then absolutely slammed. Are these companies like the most at the forefront or in the crosshairs of all of this tariff stuff?
They could be. I think their biggest risk right now is being able to secure long-term contracts and then dollar headwinds and or tailwinds, right? And so that's going to be their big issue moving forward. For those that kind of follow me, I focus on the commodities. If you want exposure to the commodities, just get direct exposure to the commodities. Instead of, you can work with a mining company, but mining companies, they still have their own internal financials that they have to worry about, their own execution and efficiency rates with their mines. And sometimes it's very difficult to try to pick out the winners or losers. So if you want to go with the miners in general, then I would probably look at a broader based, ETF in order to do so, rather than saying, a Freeport McMoran or what have you. That just seems like an easier trade. And there's a lot of products now to get exposure to a lot of these commodities, and the risk reward ratio, just trading the commodities and the amount of stress is a lot less, in my opinion, than waiting for an earnings announcement to really reflect that demand was actually there. That's the tough part when you're trading these miners.
I think that's some real wisdom. Some of these companies, some of them are they're tough businesses, right? They have to make these huge investments. It takes years to build out these mines. Sometimes, massive capital outlays, and then they're beholden to the price of the commodities market at the end of the day. So, no, I think that's great advice. Do you have any thoughts before we let you go on either currencies or the bond market? I mean, these things you would have thought there'd be significant headwinds with the way that the dollar and interest rates were rallying. And now they seem to be coming off.
Yeah. So with the dollar, could the dollar index continue to go higher? Yes. Right. You're looking at around 114 as your area of resistance there. There seems to be some momentum for reaching parity for the euro US dollar. And so that's, 60%, 65% of the overall index itself, if you're looking at the dollar index. So it's really a euro trade that you're really focusing on. And so if you kind of get that parity, that's where you're going to see the dollar strength. But if we do see a backing off of tariff policy, which, that could be the case, you're going to see the dollar kind of move to the downside. And that could be a tailwind for equities. But you're also going to see a little bit of a tailwind when it comes to a lot of the commodities too, right? So if you're looking at copper, that could be a tailwind. Silver, another one that could be a tailwind if you have a lower dollar. And then the grains, which, no one really cares about the grains except for me and a couple other people, but the grains are kind of ripping higher. For yields, if you're looking at it from a long-term investing standpoint, I feel like you can take a shot. TLT options, if you go across the curve 6 months, 8 months from now, are actually relatively cheap. Long. Yeah, if you go long, like a TLT option, not a recommendation, but the premiums are really cheap compared to where it's residing. I mean, we've had what maybe 4 or 5 cycles since since its launch of that ETF, and it's trading at the pretty much at the launch lows. It's only about $5 away from it. So I think you can take a cheap shot, long if you go out 6 months, 8 months on the options. And once again, the premiums are really cheap. And my last thought here is, look, vol right now is really cheap. I think people need to be very nimble, be very structural when it comes to their trading right now. Everything looks good right now. You trade the trend, but there's no reason to put excessive risk or chase anything right now. Be very methodical with everything, because the tape bombs and the news items are going to change the environment for the first 30 days or 60 days here. And vol is really, really cheap for January, And usually we see higher vol last 2 weeks of January, pretty much all of February, first week of March, and then a drawdown. So if we had nice gains and you did not have a hedge before, now is the time to actually put that hedge on here. And I'm cautiously optimistic on where we're at structurally when it comes to the technicals, but I do believe that we're not out of the woods yet. And I think we will see some vol probably starting tomorrow when it comes to the BOJ decision with interest rates. That'll be the kickoff. We have the FOMC meeting. And if Powell doesn't sound the same way that Waller did, that's where you can kind of get a little bit more of a backing off of the equity markets. That's what I see.
When is FOMC?
FOMC is going to be next week. Yeah. The 28th and 29th is going to be the decision day. So,
and then when's the next CPI?
That's gonna be like first week, second week of February.
Yeah,
probably second week of February.
Okay, so we have for that.
Yeah.
Wow. All right, Kevin. Thank you so much. As always, just came on, dropped so much knowledge for us. Thanks for giving us your time this morning.
Appreciate you having me. You guys have a nice day.
At KG Bull and Bear on Twitter, by the way, his handle was on the screen the whole time. Give him a follow. Great follow.
He's great.
Follow. Yeah.
He knows a lot about a lot.
That's what has struck me is it does seem like he knows a lot about a lot. A lot of people know a little about a lot or a lot about a little. He seems to know a lot about a lot.
He loves it. You could tell. You hear him talk about it.
Not really sure how, but he seems to have pulled it off. He knows a lot about a lot.
Yeah, it's not easy. That's a lot of work.
No, yeah, not easy at all. All right. Before we bring Mary on, I know we're about to open here in a couple minutes. I was looking at Oracle, looking at Johnson Johnson. J&J had earnings. Kenny talked about it for a second. Top line beat, bottom line beat, and guidance coming in above estimates this morning. So J&J is up. What is it up now, actually? Oh, I take that back. J&J is down 3.25%. Go figure, right? But the pre-market, let's see what happens when the volume comes in a couple of minutes. Oracle is the one that's having a great day. I don't know the last time I can remember Oracle being up. It was up double-digit percentage points this morning. It's not now. It's up like 9%, but it was up more than that a few minutes ago. And what?
It's almost like these reactions to earnings tend to occur in the direction of the underlying trend, huh?
Like for J&J?
For Oracle.
Yeah. Well, Oracle's not earnings. Oracle is
the ship, whatever. You can tell us about this?
They had like there was like a bunch of headlines, but they had like they announced some AI tool that they are releasing.
No.
And
Trump announces $500 billion Stargate AI venture headed by Oracle.
Okay, there was that. Oracle, Netflix, NVIDIA, right?
No. Just stop.
Okay.
Oracle, OpenAI, and SoftBank.
Okay.
Which is interesting because doesn't Elon Musk hate the OpenAI folks?
Yeah, he used to be. He was like their like benefactor for a while, right? He's not anymore, but I don't know. I don't know what's going on there.
Really weird stuff. Strange news flow. Just really weird news since last week. These tech guys, man, they're all weirdos.
They are all weirdos. You don't get to be the CEO of a major company without being a weirdo. That's what I've learned, right?
So can somebody explain to me, speaking of freak shows out in Silicon Valley, can somebody explain to me what happened with Block? So they
God, this so annoys me.
Like they're just running from the fact that they were ever called Square. Is that the problem? Why?
Just forget Square ever existed, okay? Forget Square happened. Square never happened.
This is annoying. Let's all agree to never call this whatever they want us to call it, XYZ or block. This company is Square forever. We call it Square.
I mean,
It's
I still call
ticker.
Facebook, and I still call Twitter, right? I mean, I'm not gonna start calling Square block or XYZ or whatever the hell. The ticker is XYZ now. The ticker was Square for. I will admit it was silly that the ticker was one thing and the name was another because they changed the name from Square to block. But this is dumb. So now you have XYZ.
Yeah, I see this XYZ pop up in my account yesterday. I'm like, what the hell is going on? I hate Jack Dorsey.
Haven't heard much. I did not see him at the inauguration. He maybe if he was there, I missed him
because that would have required him to take a shower and put on normal clothes.
Yeah, that's right.
What a hippie.
Yeah, all right. What else we got here? I'm looking at the gainers and losers here. Nothing jumps out to me. Oracle is big. Like I said, for Oracle to go up 10% in one morning, that's a lot for Oracle. Doesn't do that. Value tech.
This stock has been so good. This is one of them. This is one of them. AI, one of the dominant, global mega cap tech companies, just getting all the good AI deals. What do you know?
Yeah, another day, another bank popping. This morning it's Ally.
KRE looks good, man.
Yep.
We like this price action. I want to see those VWAPs get reclaimed. Whether you're dropping a VWAP at the pivot highs on these charts or the big gap highs following the election, we're like right there. Bulls need to reclaim that level, kind of take control of the tactical trend back.
All right, we have Mary here in the house. We do, actually. Fun fact. Before we bring her on, was there anything you want to talk about in the hot corner? I saw there was a Goldman Sachs purchase. Didn't look like it was too big a deal.
That was a big one, but that was it. Goldman director purchased like $1.4 million worth of shares. So that's
all right.
Goldman looks great. All of these big banks, man. Some of the best looking charts out there, period.
Yeah.
Fantastic.
Yeah.
How did Interactive do? Last night was busy. Look at this. Boom. This company is so good, man.
Oh, my God. They're crushing it.
Gap. This chart is just, it gets prettier and prettier every time I look at it. Oh, my God. Look at this. So good.
Yeah, it was a beat and a beat. Commission revenue up 37%. Wow. That's the options trading for you.
So many charts look so good again. It's one of those situations where I could just see breadth expanding as I flip through my charts. Like I could just feel it. I don't even need to look at the breadth indicators. And all of these different groups too. NVIDIA taking another shot at this breakout, probably sticks it this time. Look at John Deere. Look at the way some of these industrial companies have absolutely ripped since last week. Look at like a chart of Caterpillar. It's on. Everybody's talking about these infrastructure stocks. I love it. I love that theme. I think it's great. Shout out Larry Thompson. We were discussing this yesterday on Twitter Spaces.
Wow, all these charts kind of look the same. Caterpillar, Home Depot, Lowe's.
So good.
They look identical. That's funny. I love that.
They all look good, and they're all basically flirting with some big old breakouts.
Yeah.
I love a good breakout. I just wrote a post last week about how breakouts and breakdowns are not sticking. It's such a sloppy market that probably maybe marked the end of that breakouts not sticking thing. Right?
Well, you're maybe a couple days. We'll see. We need a couple more days, don't we?
So. I'm seeing some good things out there. We're moving in the right direction, Bulls.
Yeah, for a while there, it was a little bit, like you said, it was sloppy, right? Grant's bull market checklist was getting slimmer and slimmer, but it has stabilized, right? So things are looking good. Let's bring Mary on, see what she's doing.
Get Mary on here.
Good morning, gentlemen. Hey, it's a bull market. I've got my bull market mug today.
Bull market mug. All right, good.
So the family got me this for Christmas.
Nice. Wait, that commercial is it for Schwab where the mom is trading at the dinner table? Is that you?
I love that. My kids talk like, "Mom, you're on TV." commercial about you.
That's great.
I love that one.
Mary, the Robin Hood.
Oh my gosh. I was actually talking to my husband about this last night. I actually had to go back through my Twitter to find when I first posted it, when you guys were just giving me so much shit about that particular trade. And it's now, from when I got in, it's up over 300% now in a year.
That was some sentiment. That was some sentiment for you.
Yeah, exactly. Yeah, when you guys start to get really super bearish on things, I kind of start to look at it from a bullish perspective.
No, we hate this thing. Speaking of weirdos,
what is your beef with every CEO ever?
I love a lot of CEOs. I was listening to CEO interviews all morning at Davos. I love a good CEO.
Okay. You only like some of them. Okay. You either love them or you absolutely hate them. There is no middle ground. There is no CEO with which you have neutral feelings for. You love them or you hate them.
I have strong opinions. We come on here and we talk about stocks all day. Is there anybody more important to all of these stocks than the man that's leading the show?
Don't you always say the CFO? Just kidding. Moving on. Okay. Mary, besides Robinhood, what's on your radar here?
Yeah, so I mean, a lot of things just have still been working. Even though we had kind of a little pullback there, I'm still just in a lot that I was in really right before the election. They just continue to work. So one thing that I'm watching, though, you've been talking about it, is the dollar. And so if we start to see the dollar come off, a chart that has set up beautifully for precious metals is Agnico Eagle Mines. I got an alert on this one, I think yesterday, AEM.
Okay.
Look at this base.
Oh, wow.
I mean, hello. It's so pretty, right? Ooh. So,
yeah.
Go ahead.
No, this is great. I like it. Keep going.
So, right now it's kind of looking like it might be triggering here again today. So I'm watching this one this week. This would be one of my more longer term, I'm not going to just day trade this or hold it for a couple of days. This would be, if the dollar's going to be coming off, it's probably going to be coming off for a while. Precious metals, we would expect probably to do well in that scenario. And so I would look for this to, finish the base and head on up.
Mary, you're not doing this base justice. You could zoom out another 10 years. This thing is huge, absolutely massive base, right? So this where you have your resistance line drawn right in the upper 80s here, that's the exact level where price got stuffed in 2008. And then again in 2011. So we've been up here a couple times already, digesting some of that overhead supply. This one, I feel like it's taken so long to break out, I keep forgetting about it.
It's why you have to keep setting the alerts, because I had forgotten about it. And like I said, the alert went off yesterday, or maybe, it must have been yesterday because market wasn't open Monday. So this one went off and now it's on my radar, and I'm going to watch to see how the week closes.
Another big old beautiful base. You know what this reminds me of? Talking about this and looking at this chart zoomed all the way out, Micron looks like, speaking of a frustrating base, right? Looks like it might finally be leaving the station. Yeah.
Well, and the whole semi space, I've been kind of poking around in a lot of the semiconductors just because, they kind of had their digestion or, their pullback or whatever you want to call it. And we're starting to see that rotation back into some of those leaders again. So yesterday after the market closed, I was really going through semiconductors, and a couple of those are setting up really, really well. A couple of them, I think we talked about a couple of weeks ago, like LRCX is one that I'm in right now. There was just a very well-defined risk reward scenario there where if we're wrong, we're going to know quickly, and we're going to get out with most of our money still intact. And if we're right, then, sky's the limit. So,
and some of those stocks that you're talking about, like the Lam Research setup, these are secular leaders that are in 30-40% drawdowns in the middle of the bull market.
Yep.
So it's kind of like you have to take that shot every time, especially when you can define your risk, like we were able to those prior cycle highs so clean.
Yeah, exactly. So another chart I brought along, just because we're talking a lot about Bitcoin, I brought HUT, and this is one of the charts that has had my attention again. Just a nice base there, a very well-defined level. I've been in this one for a while. I was buying it back in 21. So I've been adding to the position, and I added again just a couple of days ago, and ahead of the inaugural stuff that was going on. I was really hoping for, the Bitcoin mentioned in the inaugural speech. Didn't happen, but it's a great level to trade against. And, like I said, I've been long for a while, so this is what I've been holding. Still super disappointed. I'd love to get your take on this, Steve Scoop and Score Straw. I just noticed the Scoop and Score Straw.
I don't know who did that.
I did
You
that.
know, Bitcoin with what it's been doing over 100K and holding that level, the
Yeah.
miners just, I mean, this has always been where I've gotten a lot of my juice, and it's not this time.
I just have a soft spot for the miners. This chart
I
looks too good.
know.
So many of them
Right?
just still look so good. I got one for you.
Okay. Well, there are quite a few. There are a couple of others that I'm watching. In fact, one from one of our other services that
Keep going.
I'm getting involved with here real soon. Oh, the last chart I
amazing.
brought was just kind of more big picture. So Google, you have to do
So
Google
good.
chart, right? So
Yeah.
I mean, and I even put the Fibonacci extension on there. I'm getting fancy. Watch out now. So we've got it just consolidating right up there at those former all-time highs, and we're at all-time, more or less all-time highs. And if it's a bull market, this should go. And so I'm watching this level, and I mean, this is one of my long-term holdings. It's just been in the account forever. And I'm looking at maybe adding a little bit more here, just because it's going to go. That's, again, you've got a really great risk-reward opportunity, well-defined area. If we're wrong, but it's a bull market. So let's go.
I look at the Amazon chart, and
Same.
I'm seeing a coil resolution that looks pretty similar to this little consolidation in Google. I think if one goes, the other one goes. All right, so you're getting some supporting evidence right there. Meta coiled up really nicely too. The Mag 7s are back. Everybody's talking about Apple. God forbid Apple goes down. The Mag 7s are doing big things out here.
But isn't always there that rotation kind of between all of them? Like one's kind of outperforming while the others are kind of like, meh, and then they rotate around. And so, yeah, it's kind of, I was digging around yesterday in kind of that AI space and the semi space and kind of those former leaders. Seems like we're starting to see some rotation into them again as potential leaders moving forward again.
Yep, tech looks fantastic. Throw up my Galaxy Digital chart. This one just is so clean right now. I love this. I don't know if you're involved. We've been involved
not this one.
for a while.
Nope.
But look at how clean this one is. This is the BRPHF. Shout out Mike Novogratz. I love this. I think this is a great vehicle.
Absolutely.
They're basically like a crypto hedge fund, crypto investment. They do a lot of different things. But yeah.
So that's what I've got. I've been adding to positions in China and China stocks. Started building those a few weeks ago, maybe before Christmas. Still, I'm not doing much of anything. A couple of them actually have been pretty good so far. Like I'm thinking of SE, C Limited, although that's just Asia, not China, correct?
Southeast Asia.
Yeah.
Yeah,
So those are, some are working, some are not. Like the BABA is not working yet, but I'm just continue to buy the base, and I think China eventually goes.
Yeah, so some look a lot better than the others.
Yep.
I don't know how it could get worse for these stocks from here.
We'll
Oh,
see.
it can always get worse.
It can always get worse.
Yeah, I mean, come on.
I mean, look at the pot stocks. Look at Tilray, because I watched that one.
I mean, there's so many. There's all those EV stocks that you don't even talk about anymore, right? That are below $1, right? Speaking of which, shout out Rivian.
They have.
This Nancy Pelosi AI stock that she bought yesterday, the Tempest. You guys see this?
Oh yeah,
I didn't even look at it.
It was the top gainer of the morning, all morning.
Another 5% today.
5%. 5% might as well be zero, right?
Did Kenny talk about that one? Is he trading that one?
He didn't talk about it today.
Okay.
Wait, remind me the ticker again. Shoot, it was
EM. Nancy Pelosi's political filing just moved the stock 40%.
Yeah. It's crazy.
Wow.
Yeah.
But I mean, that's like one roaring kitty coming out and posting some weird.
Yeah.
Well, I mean, this wouldn't have happened if it didn't have AI in the name, right? I mean, so I think
it was an interesting buy.
This goes back to the point that Kenny was making, which is that the AI trade, which unwound, is kind of back with a vengeance, right? So
that's why, I was poking around in that space yesterday, just looking at charts and seeing if there were logical levels. So I've got some alerts set. We'll see what happens.
That's the best way to do it. Is just find a logical level up here and down there.
Yep.
Find a logical level. It's the only way because these
Where
things
you can define your risk. Exactly.
they're nuts. All right. Should we do some resets? Get out of here.
Mhm.
All right.
So I'm on day 2 of a snow day. My kids were home for Martin Luther King Day, and then
What?
yesterday was a snow day. Today is a snow day. One,
God.
because
How
it's
much
so
snow do
crazy
you
cold.
guys get?
Well, it's so okay. So it's crazy cold, right? So it's -20. So they don't send kids to school just because kids walk to school, and like there's exposure risk and all that kind of stuff. And I live right on Lake Michigan, so we've been getting like about 3 to 5 inches every day for the last several days. So I mean, we've got probably between 1 to 2 feet of snow, new snow here. Yeah. So and now because it's so cold, the salt doesn't work on the roads. So and it's wind now. The wind has picked up, so now there's all the drifting and the whiteout conditions. So school's closed. It'll probably be closed again tomorrow.
You guys are buried.
We're buried.
Wow.
It's not one of the worst winters, but it's pretty cold.
And then the snow just all freezes. So like if you go a day without doing your car, you're SOL because your car is now frozen, right?
I had my doors freeze shut one time. I made this was of course in my youth. I made the stupid choice of going to the car wash and coming home and letting it sit outside, and it was freezing, and it was really pretty cold, and the car door froze. I couldn't get in for
I mean, yesterday I was brushing off my wife's car, and I snapped it. It had been sitting there for like 4 days, and I snapped the wiper right off. I just like snapped it off. So I guess I need to get a new wiper now.
I've got friends down there in the south, like in Louisiana, and I mean they're getting like measurable snow and having obviously, of course, they have snow days, but it's like making snowmen and things. Like this is crazy.
I know we're in a bit of a freeze here. So
polar vortex.
No doubt. My recess, a couple movies I wanted to recommend that I watched over the weekend on the planes and such. Annihilation, pretty good sci-fi movie if you're into like kind of weird sci-fi stuff, but like not futuristic, like not like space sci-fi, just like Earth sci-fi. Pretty good movie. And then A Real Pain, loved it. Can't recommend it enough. It's about 2 cousins that go to Poland to get in touch with their grandma's heritage and kind of see how she survived the Holocaust. But it's funny. It's not like a well, it is. I guess some parts are sad, but by and large, it is a comedy, right? So A Real Pain and Annihilation. Those are my 2 recs for the day.
Did I talk about that weird Blink Twice movie that I watched?
I think you mentioned it, but remind me what it was about again.
Super creepy. You gotta watch it. It's strange. Another like Eat the Rich movie. I can't get enough of that theme. These movies are hilarious.
Oh, I'm so over that theme. It's funny you say that. I'm so over that, man.
Because dude, it's rich people from Hollywood telling you to hate rich people. It's just so ridiculous, the whole thing. But this has been the mega trend in movies for years now.
Yeah, it was cool like 3-4 years ago, but no, man, I don't know. I just can't do any. I can't do any more Eat the Rich movies.
On that note, can't wait to see the new season of White Lotus.
Yes, and for those of you watching the new season of Severance, I have not watched it yet, and I will not watch it probably for a little while. So please, no spoilers. But I hear it's a great season so far. So we'll have to keep that on the list. But still talking to some friends.
You guys are so cute watching movies. I haven't watched a movie since Top Gun Maverick.
Mary, I was on an airplane twice.
Okay,
so
that's fair.
when you're on an airplane, you watch a movie, right? That's what you do.
Yep.
Man, you guys without the kids.
Yep.
Just wait just wait, Spencer. It's coming for you.
I love
never watch a movie again.
Love a good airplane movie.
It's true. I actually often will watch Top Gun on the airplanes too.
There we go. All right. Kenny Glick is going live on the channel 3:30 today, right for the close. So we'll have that, and we'll see you guys tomorrow. Right here on the morning show. So thanks for watching. Thanks to Kevin Green for hanging out. Thanks, Kenny. Thanks, Mary. Drop us a like. We'd appreciate it. Subscribe and do all that good YouTube stuff. Look, there's a graphic on this screen right there. And go make some money, all right? We'll see you guys tomorrow, I guess.
Adios.
Bye.
I can't can't take no loss. I don't even know what it costs.